All right, guys, what's going on? Good evening, everybody. Welcome aboard. We're doing a video here recapping the top 10 stocks of 2023. We sent out this video back in January on our YouTube channel. So if you haven't checked it out, take a look at our YouTube channel. We have it there. It was a recorded video as well. So since we are a little slow in the dog days of August, decided to do the request that we had on the morning note to do a recap of the top 10 stocks of 2023, what we think about them. Generally, a quick recap. We usually do more of a deep dive towards the end of the year when we see how we did and everything like that regarding our picks. So here are the top 10 stocks of 2023, as you can see in front of you. Here are the names: Tesla, Microsoft, Boeing. SMH is the semiconductor ETF. GLD is the gold ETF. IWM is the Russell 2000 small caps ETF. EEM is the emerging markets ETF. RSP is the equal weighted S&P 500, all 500 stocks equally weighted, unlike the SPY. FCX is a copper company, Freeport-McMoRan. TLT is long-dated treasuries. And we've heard a lot about that lately. So that was one of our top 10. So that's the list that we have. We're going to go ahead and minimize that and focus on the returns so far. This is brought to you by year-to-date return. YTDreturn.com. All you do is put in the ticker and this comes up here. So we'll start with, for example, Microsoft. And again, all of this is based on the year-to-date return as of today, based on the 30th of December 2022. I believe the first trading day of the new year was the 3rd of January, or maybe the 4th. So again, we'll go over exactly if you put in X amount of money, how much you would have gained. So we'll do a chart for each one. So let's start with, let's go with Tesla. Tesla being the top of the board. And with Tesla, we talked about, kind of how important a household name is in terms of a company. When people think about coffee, they think of Starbucks, fast food, McDonald's, electric vehicles, EVs. It's Tesla. Whether you're a fan of the CEO or not, Tesla does have the highest market share when it comes to EVs. EVs are the future, as we know. So again, this is the return. This is the thesis. 106% gain since December 30th, 2022. As you can see here, about 106%. So again, if you bought $10,000 worth of shares, you're up to $20,609. And then if you're up $1,000, if you did $1,000, just move the zero, and you're up about $2,000 currently. $2,609, no, $2,000, excuse me. So not bad of return in regards to Tesla. So let's go ahead and chart it together. 106% return. Funny enough, ironically enough, I actually shorted Tesla today in terms of calls, in terms of puts, excuse me. So how funny that we are long Tesla and talking about it today. Looking here on the daily, you could see that we do have a couple of gaps to fill. Still an upward trend, but still rejecting this main downward trend of the past year. Again, this is a 52-week chart here. So we start with 2023 in January. You can see where we were at the lows, around 101.81. We're now at 251. We got as high as $300. So even with this pullback, 106% return is pretty darn good. But again, if you go by the 30th, I don't know exactly what they're basing on, maybe 119 a share, but it got to 101.81 at the lows on the 6th of January. Got a nice boost with earnings, another nice leg up after earnings in April, and then we just had our earnings and we fell back down. We are now below the 50-day moving average, so I expect us to fill this gap here around 235.13. In terms of support, you're using 195.87 as your support. Even if you bought on the 6th of January and you tagged the 200-day moving average, you're still up pretty nicely on the name of Tesla this year. You can see from 101.81 on to 251.45. Let's go ahead and go over that year-to-date return. The start price per share, I have it at 123 based on year-to-date. So I don't know if that's really the case. Is it 123? Yeah, we'll call it here as close. And then 253.86 is the end close price. I don't know where they got that. So this may be incorrect, at least by a couple of dollars. But 106% is the gain so far. So A great company to own in terms of what I expect coming up. Again, that gap fill here at 235.13. I think it gets compelling at 195.95 to buy. Maybe we get an October slam as we're expecting through seasonality. So I still think Tesla is the name to own in the EV space. Nothing really has changed. Let's go ahead and go to the next one, Microsoft. And we could see here that was our next pick. And we'll go ahead and take a look at the year-to-date return on Microsoft. MSFT. We'll get the year-to-date return. Again, same kind of principles followed. On the 30th of December is when it was actually done by, the year-to-date. 239.82 is where we started for the year. 327.78 is where we ended, but we actually closed at 330, so give or take a couple of points. Year-to-date return is around 37.32%. So again, if you invested $10,000, you're up $3,732. And if you invested $1,000, you're up $370. Very nice returns on a great company to own long term. I mean, even with the headlines in regards to the Activision Blizzard acquisition, the AI stuff has been a boon in regards to Microsoft, and it's a name that you just want to own forever in a sense. I mean, you really can't go wrong with Microsoft long term. Really, all you're doing now is just fighting on if I can get a better price. There is a gap to fill here at 317. If we break below 325, I definitely want to short down to that 316 level. In terms of where I see massive support is around 284, and that's another gap to fill from the earnings report of April. So again, that would probably be that scenario with Tesla being that 200-day MA. That's probably the lowest we'll probably get, maybe 280. Again, I think the 200 MA holds for both stocks. Again, you're at a point here, if you want to take some profits, that's completely fine, but I think it's best just to hold it and own it and don't even think about it. Microsoft's a winner. You want to own that long term. I mean, fortress balance sheet, great management. The stock performance shows it's a name you want to own. SMH, and funny enough, this was on me. I could have said you could have owned NVIDIA long term, and I do own it. But NVIDIA I could have easily put on this list. But SMH has all of the semiconductors. We didn't want just single stock risk, but either way, SMH gaining 52% on a year-to-date basis is absolutely excellent. I'm glad we caught that because, like we said on that video, semiconductors is the new oil. And this was before the AI craze. So I'm glad that we knocked that one out. And you can talk about what does SMH own. So again, we go to SMH Holdings. And then we can take a look at exactly what stocks are included there. I think we went over this on the video as well for the top 10 stocks. And I even said NVIDIA is 20% of the damn fund. Taiwan Semiconductor be about 10%. Broadcom, ASML, Lam Research, Texas Instruments, Applied Materials, Intel, Qualcomm, and Analog Devices. You don't even have AMD in the top 10 holdings. So again, I still love AMD as well, but NVIDIA being the heavy one, Taiwan Semiconductor obviously having geopolitical risk as we know, but NVIDIA is the heavy hitter there, and that's why really SMH is up. We just didn't want single stock risk. 52% is absolutely excellent. I'm glad that we got that correct, but I still like semiconductors long term. I mean, all this computing power and AI, again, artificial intelligence, semiconductors are going to be that lifeblood for that AI economy. NVIDIA, AMD, those names. So again, I think SMH is a great one to hold. Again, it's prevents single stock risk instead of being just completely exposed to one company, NVIDIA. And NVIDIA has been great, don't get me wrong. But again, having a good diversified fund of the semiconductor space, kind of invest in the theme, not just the company, I think that's a pretty prudent way to go. SMH 52% year to date. Again, if you invested $10,000, you're up to $15,202. So well done. Let's go to Boeing, and Boeing just had their earnings, and finally we got the breakout that we wanted. So let's go ahead and take a look at the return on Boeing. We're going to minimize this. Boeing, the return is about 21%. Again, you can see the entry in terms of December 30th, 2023. You're up 21%. We're going to go to the year-to-date chart again. We're going to type in Boeing, and we'll go get the year-to-date return as soon as this loads. 190.49 was the start, 231.36. That's a gain of 21.46%. That's about accurate. So again, $10,000 invested, you're up $2,146. So to $12,146. So Boeing's been having a great year. Obviously, that's an industrial name. Obviously, we could have done just put all tech in there and just say, yeah, we didn't think tech's going to bounce. We didn't want to be just so heavy into one sector either. Microsoft and Tesla, whether you call Tesla a car company or a technology company, again, it's still tech centric. So again, Microsoft, semiconductors, and Tesla being the top three that I liked, the team liked. I still think Boeing still has a little more to go. We're starting to break out above 241.11, and once we do, we're going to get to 256.65. This has been a name that we have been trading all year. So again, none of this is new. Boeing still has more to go, in my opinion, to 257 to the 260 range. 278 being a huge resistance level. That was the most recent highs. And remember, guys, this is stock that used to be 446. In terms of what we can expect in the future, as high as we can go, we can get to 328.90. That is a gap to fill here on Boeing if they can get their act together. The Dreamliner, the 737 Dreamliner, the 787, I believe. Maybe I'm getting the models wrong, but it's good to see that Boeing is above major moving averages at least, and starting to break out as well. We hit a golden cross back in December of last year. So that's why we added it to the top 10 of the top 10 stocks of 2023. Boeing, well done to the team. Next one we have here is GLD, gold. And again, this would have been just really a hedge against a falling dollar, and the dollar did fall. So we got that right. Gold, again, don't expect gold to make you rich. Up 6% year to date. Really, the idea was to have a well-balanced top 10 of 2023. And I think with having gold GLD, it has helped. We did get to 2,000 an ounce on gold, but you could see 6.22%. You're really just in wealth preservation mode. If you did $10,000 in it, you gained about 622 bucks. Really, the idea was protection than anything else from any kind of craziness. For example, the bank crisis that we had, the SVB bank crisis. So gold being a nice hedge of that as we got that pop in March, April into May. But as everything kind of cooled off, we could see we got back down. So we got as high as around 191.44, 193.30 is the 22 highs. That was with high inflation. Inflation has lowered, but yet we're in the top end of the range on gold. I still expect the dollar to be weaker as we go on. We're in the tail end of Fed hikes. So GLD is something that I expect to go a little higher and possibly get to around the 190 zone. So again, I like where we are, but again, I'm not expecting more than 10% gain on GLD. That's not the point of having GLD or gold in the portfolio. IWM being next, this is the small caps ETF. Starting to break out, getting kind of close, really, tracking where it wants to get that next leg above 200 to 203. We tried to play those calls last week. It didn't work out with that Fitch headline. But again, I still think 200 is in the realm of possibility. At least up till October. And in October, I'm expecting at least a pullback in terms of seasonality. So let's go and take a look at IWM Small Caps ETF. Let's go to IWM, and again, another name that I trade on options. IWM up about 12% year to date. That's pretty good, but still lagging the S&P 500. So $10,000 gain invested gets you about $11,208 with a gain of about $1,208 based on this. So started at 174.36, now at 194.17, 194.30. Again, I can't really say, I want to give it a round of applause either, but I like the fact that we're diversified, at least with this top 10. I do like small caps for more upside. We just need to crack 200 and really staying above it. I think we get it. I think IWM has a little more room to go as we actually broaden out this nice market push higher, this new bull market, not just be concentrated in tech. We actually get a broadening of this rally, which is what we want. EEM, again, emerging markets, the Indias of the world, China not being emerging market, but Asia, again, we just didn't want to be United States centric. And right now, EEM, I think the biggest holding of EEM, I want to say is Alibaba, but I'm going to go ahead and make sure. So we're going to go to Market Watch, and we're going to go to the EEM Emerging Markets ETF. And Taiwan Semiconductor being number 1, Alibaba's number 4. Samsung, Tencent, China, again, we're basically playing a China comeback after COVID. We do have a gap to fill back above 41.32, But once we break 42, that's where we're looking at 44 to 46 range. What we really want to do is get back to 50. And I think we do get at least up to 44 by the end of the year. Hopefully China gets their act right. Maybe Alibaba has a great earnings call this week. Interesting enough. But the question is, does China bounce back? How much stimulus is it going to take? So EEM kind of holding pat, about 8%. That's where we want to be. If we want a little bit of diversification to some international exposure, I think EEM is a good way to do it. RSP, this is the equal weight S&P 500. I expected a broadening out of this rally, not just being tech-centric, obviously tech being great. We already have exposure with that. But again, we're starting to see we're going to get very, very close to a double top breakout on RSP, equal weight S&P 500. Again, I said that we're going to get to all-time highs this year. I think we get there before October, and then we'll get a pullback, a nice juicy one, maybe about 4 to 5%, just to kind of, reset call options, maybe take some profits for those who have held since last year's 2021's all-time highs, or the beginning of 2022 all-time highs, and kind of recouping their money. They'll sell off, just get be flat, be happy, and that's usually what we get in terms of all-time highs, being a level of where like, okay, just get me out at any point because I'm done with this volatility. So 156, once that cracks on RSP, if we get to all-time highs, will get us to around 162 on a SPY, being on all-time highs, if not a lot higher. The question is, do the industrials, does healthcare, does energy, do the other stocks also come to play, not just the same old 8 mega cap names that move the market, the Nvidias, the Apples, the Metas, the Googles, the Amazons, of the world. But again, we need the broadening out of the rally, and I think we get it. Again, we still have that golden cross back from June on the equal weight S&P 500. It was the same setup that we had on Boeing. I expect equal weight S&P 500 to go higher. Let's see if we can take a look at that year-to-date return based on here. This is from the ytdreturn.com. Started around 141.25, now at 151.34, up about 8% year-to-date. So again, if you invested $10,000, you're up about $815. And again, this is just expecting a broadening out of the rally. I really don't think we missed out on much. But again, this is an ETF. You're not going to get some craziness either, unless you're getting some triple leverage ETF stuff. FCX, again, a real play on construction broadening out overseas. We know that copper is a big, big barometer of construction activity. So looking at FCX, want to get above 45 one more time. Once we do, we should get to around 46 to around 48. Highs of the year will be around 52. So it's really based on the simple fact of, does copper prices go higher? And that's really all we're looking for. So we're going to go to HG/HG. And if we go to the daily chart, again, pretty much just choppy. We are below the 200-day, at least below the 20. But again, we're starting getting compression of moving averages due to the chop in copper futures. But if the dollar rolls over as we expect commodities to get back higher. And I expect FCX to be a big beneficiary of copper prices bouncing back. And I think the last one here on this list, I think they didn't do FCX. That's 13% year to date. We went over the chart. Let's take a look at FCX again on ytdreturn.com. And again, started on the 30th of December. Started at $38 a share, now at $42.51. That's a gain of 13.03% year to date. It does pay dividends, about 45 cents, so you did get a little bit for waiting. 11,303 is the ending investment if you invested $10,000 in FCX this year. Am I missing anything in regards to dividends? Let me see if EEM does, because I did not include dividends in this number. So 31 cents in dividends for EEM. So at least that. I don't have the yield in terms of dividend yield, about 1.53% on EEM. You're not going to get too excited. FCX in terms of yield, about 0.71%. Not exactly gangbusters either. We're going to go to Microsoft for their yield. And their yield's paying about 0.82%. And again, the higher the stock price and the dividend doesn't change, the yield goes down. Next, we're going to see GLD. I don't think they pay a dividend, obviously. So again, don't expect that. That's at zero. But again, just to show you guys confirmation, Boeing doesn't pay a dividend. I know that. Tesla doesn't pay a dividend. I know that. SMH maybe pays a dividend. So I want to go ahead and verify that. SMH does pay a 1.54% dividend, but dividends collected shows 0. So I don't know if that's the case there. If there's actually a dividend payout in regards to SMH. RSP, equal weight S&P, 1.68% in terms of a dividend reinvested per share. It's $1.33 per share. And the last but not least, the only red one on the board is TLT. So let's go ahead and take a look at that. That yield pays around 3.46% year to date. If you bought it on the 30th of December at 99.56, it is now at 96.53, down about year to date to return about 1.5%. That's the only red one that we have. And again, government bonds is really just holding on to cash and paying out a nice return. So again, pretty flat, but again, you're getting the dividend yields. So if you add the dividend yield plus the year-to-date return, you're actually at a net gain of 1.5%. That's cash for you guys. You could have easily bought, a 2-year note, but again, I went to do it as mainly just government securities, government bonds to pay out. So let's go and take a look at it. And the reason I say TLT is because it's the most traded ETF in terms of options. But there's other treasury ETFs out there. It doesn't have to be this. We do have a gap to fill back to the upside, but we're starting to test some support that we were back in October when we had high rates. So it's really dependent on the Fed. If the Fed pauses and we're at the end of the tightening cycle, we're going to get bonds being bid because we know this is the highest in terms of yield that we're going to get on in terms of treasuries because of the fact that rates are not going to go higher. So again, unless we have a demand issue where there's too much issuance of government debt and not enough demand from buyers, natural buyers, other than the Fed, which they haven't bought at all, then that changes the conversation. But if you're telling me that you can get, at least on a 10-year basis, 4.078, but if we started looking at the yield curve a little more, let's go ahead and do that together. We're going to go to Market Watch. Let me see if I can go ahead and get rates. So we're going to go to rates. We're going to dismiss rates. And we're seeing if I can get the full yield curve on the 10-year. Let's see, bonds. So I got the yield curve here. So let's see, CNBC US bond yields. Let's make sure we have the right stuff. Okay, let's get to US Treasuries. And you can see if you bought a 1 month, you're getting about 5.43. So again, we have an inverted yield curve, meaning that the shorter end securities, you're spending less time but getting a higher yield, and the longer dated securities are getting a lower yield. So again, that's an inversion of the yield curve. So it's kind of backwards in a sense. Like, why would I want to invest long term if I could just invest for 2 months, 1 month, 3 months, and get way better return than kind of parking my money for 30 years? And again, that's really based on the Fed because they keep raising. So the expectation on a shorter end is that we're going to have higher rates. But the longer end is the expectation of we're going to get cooler rates. Now, what does prevail? The question really is, again, the Fed. Are they going to raise rates again in September? We don't have one in August. I still say the thesis stays the same. Lower inflation, what we've gotten, lower dollars with what we've gotten, and lower rates, which we will get. So here's the dollar. Really, since if we start in January right here, we're basically to flat, but we started getting lower and lower and drifting lower. So it's not exactly like an ETF where you're going to get some really big swings, but you're starting to see lower lows, and that's kind of lower highs. So again, slowly melting like ice under the sun is the dollar. And again, I still think that's because we're at the tail end of this fiscal tightening or monetary policy tightening by the Federal Reserve that we've been doing now for over a year, almost about 15 months of monetary tightening. So the question remains, does the dollar continue to fall? Will that help commodities? Will rates continue to go higher? That'll hurt, bonds. Bonds prices and bond yields move inversely from each other. So when bond prices go down, like TLT, that means yields are higher. So remember that. Always have that kind of, balance every time. When you see yield spiking, that means bonds are on sale or bonds are cheaper. When bond prices are going higher, that means yields are going down. That's every time. So that's where we are, and that's what we're looking for. So let's go ahead and recap one more time. Here we go. Top 10 stocks of 2023. This is the year-to-date return since December 30th via ytdreturn.com. Tesla, the big winner, 106%. Again, if you bought December 30th. Microsoft 37%. We talked about AI. Semiconductors, the lifeblood of the new economy, now the AI economy. Semiconductors are the new oil, or what oil was at the turn of the 19th century, the 20th century, excuse me. GLD, gold, again, nice little hedge. Boeing, nice bounce in industrials, seeing the broadening out of the rally, not just tech, 21%. Small caps expecting more of a rally as well in terms of broadening out. Same thesis with the RSP, equal weight S&P 500 being up 8%. Emerging markets, again, really, the catalyst being the China stimulus issue, the reopening and such. We haven't seen that as of yet. So again, 8%. And copper being the catalyst of growing construction, copper being so important to infrastructure, as we know, and of course, electronics. And TLT bonds, we expect bond yields to kind of level off and pull back down, which means bond prices go higher. Not a bad place to park your money. Again, it shows negative 2% on a year-to-date gain, but the interest rate, again, does cover the actual loss in terms of the equity loss. So you're actually at a net 1.5%. And again, year-to-date in terms of stocks, we'll go ahead and take a look here, and we'll bring it up on SPY. If you just bought SPY instead, what's your year-to-date return? Just on SPY this year, 17.72%. 1, 2, 3, 4. About 4 of the 10 names here are beating the S&P 500. It is no secret that 3 of them are technology names. They are leading the way. Boeing outperforming as well. IWM running behind. Emerging markets, as we know, international. Equal weight S&P running behind of the S&P because the S&P 500 SPY is weighted with tech, and RSP is equal weighted. FCX not too far behind for being a commodity stock, and bonds still underperforming stocks this year. So we'll go ahead and recap it at the end of the year, but we'll call this not even the halfway mark, as we're in the third quarter of 2023 already. We'll see how the top 10 does for the rest of the year. I expect more love in terms of the stocks this year. Again, we'll see if we get a pullback in October as expected. But with that being said, again, thanks again for watching this video. I'd love to do it. Any other requests for videos, please type away in our comment section, and I'll see if I get that done for you. Thanks again. This is your channel. Appreciate your guys' views as always. Make sure to like, subscribe, and turn on notifications for our next great video. Appreciate y'all. See you guys later. Cheers.